We are back. We are speaking with Phil Davis, founder of Philstockworld.com. And Phil, if we could, let's review the Philstockworld MoneyTalk portfolio. Last time we checked on it, it was up quite a bit. I think it was up about more than 200%. So that is quite a bit. Where are we now?
Well, last time I was on the show was March 1st. So that's basically 5 months ago at this point. And the portfolio was at $310,000. It started at $100,000. And we had a good quarter, basically. It gained $92,000 since I was last on the show. And that's up 29.7% since March. So we're ahead of the S&P 500. I'm happy about that. Things are going very well. We gained $100,000 on a $300,000 portfolio, and we're 75% in cash. So, you know, we're not even fully invested, and we're making these kind of numbers.
That's that's some pretty stellar numbers, especially the fact you mentioned the 75% in cash. That says a lot right there. For people who are not familiar, this is a portfolio that you adjust quarterly. You only trade on days when you're coming on the program to talk about it, so it's not, you know, traded in and out all the time. Right now, though, given how well it has done already, what changes are you looking to make, if any?
Well, we looked over the portfolio. We just added Qualcomm and IBM on the last show, and looking over the portfolio now, we've decided to take JP Morgan and Logitech off the table because both of those are at about 80 to 85% of their full potential already. There's no sense in sticking with a trade when you've got more than 6 months to go, when it's only going to be able to gain 15%, because clearly we can make more money than that over the course of 6 months. So why risk our 85% just to make 15%? That is not the way we play. All right, we use, you know, we're fundamental traders. We use options for leverage. So we make tremendous amounts of money when we make the right call, and we're pretty good at making the right call.
So JP Morgan, Logitech, you're, again, taking a bird in the hand, so to speak, which I think is useful for people to remember. Like, don't try and get that last little bit. What about IBM and I think Intel, Qualcomm, Sophie, and Yeti? Let's talk about all of them.
Oh, okay. So very quickly, IBM is up 334%, that spread. It still has, though, 130% from the 334 where it is. It still has 130% more upside potential from where it is now. So there's no reason to cash that out. That's good money. Intel has 100% upside potential. We're going to keep that. Qualcomm is new. It already made 100% since March, but it still has another 172% of potential gains, and we're very confident in it. SoFi, the bank, or not a bank, but sort of a bank, they've got 155% upside potential. And I'm talking about right now, you can take these plays. They're on track to make this kind of money. And Yeti, a prop. Yeti, still ice in it from this morning, is up it has 244%. This is our trade of the year, by the way. Has 244% upside potential from where it is right now in our portfolio.
Can you remind people?
So you can go on these trades as brand new and make that kind of returns.
Yeah, and let people know, too, they can find the Philstockworld portfolio. There's the link right on the screen. You can see it right below, right there. Also, you can watch previous programs. Can you just remind people about Yeti again, who they are?
Oh, Yeti, they make these very good cooler cups. See how large it is?
It's more than a cup.
And no, they're very expensive thermoses, coolers, camping equipment, so on and so forth, but it's also very, very good. And, you know, in that kind of market, people don't mind paying for quality. Like, seriously, I put ice in a drink in the morning and it's still, you know, inside the cup, everything's still cold. So it's well-made stuff. I've had this one for a couple of years already. I mean, it was well worth $30 or $40 I spent for it. They're small but growing quickly. They've got a great brand. They're expanding the line of goods. So we like them. That's why it was our trade of the year this year, because we knew it would easily make 300 to 500% from our initial investment. We're already well over that. So our trade of the year has been successful, but we're sticking with it because there's still plenty more to come.
And I should remind everybody, again, you got to do your own research, figure out what works with your own risk profile. But these are all companies that these are companies you like to own. But again, you're getting the leverage when it moves in the direction that you want it to move. So you're not upset if you end up owning more Yeti out of the options plans you have.
Absolutely not. But these are our all-star trades. These are Iron Men trades that we think are absolutely going to do well, because in this portfolio we can't adjust them except for just randomly when I'm on the show from a quarter to quarter. So we have to have trades that are essentially bulletproof. And that's why we love this whole set of stocks that are in this portfolio.
All right, stay with us. When we come back, we've got a few more picks we're going to talk about in a bit more detail from the last time when Phil was on. We're going to lay them out for you. You can see how they're constructed, and we'll get some more details on why he still likes them. You're watching Money Talk. We'll be right back.